One of the biggest enhanced income funds has issued a warning to clients that some of its assets is under scrutiny for further investigation. We speak to investment strategist Magnus Heystek of Brenthurst Wealth Management. Welcome, Magnus.
Yes, Chris, good day and nice to talk to you again. Yes, the news has been in the market for quite some time that the My Plan Enhanced Income Fund, which is and I'll explain in a second how these things work, they've issued a notice to the investment community and to their clients, the investors, that a small portion of the fund has been side-pocketed for further investigation. In other words, there might be some problems with the fund or the assets, the underlying assets. And I'll get to that in a second. But that has been put into a side pocket in your portfolio. So that is effectively being frozen and you cannot transact on it. You can't withdraw it. But the money is still there. Now, this has happened in the past. But it happens in the bond market, the capital market, where the fund managers invest in a wide variety of instruments, not equity instruments, but they invest in bonds, government bonds, corporate bonds, and other type of short-term investments which generate an income. And it's become very popular in South Africa. And as I said, this is a very large fund, and there are many of them, and they've been very, very good investments over many, many years. They've actually beaten the stock exchange. But unlike the stock exchange, where the price adjustment takes place every day in the market, in other words, if a share is in difficulty, investors will simply sell out and get out, or the fund manager, or the price is just devalued by the market itself. A good example is Pick and Pay, which we all know is in difficulty. So their share price has gone down by 40-50%. But it's still there. It's in the portfolios of many people, and they see it on a day-to-day basis. Income and bond funds work slightly different. These are fairly obscure investments for the general public, but it is money that is invested on your behalf into a wide variety of funds, and they're generally much safer than equity investments. Now, this particular fund put out a notice in December that they are looking at some of the issuers, the notes that they have in the portfolio. And then 2 weeks ago, they said, look, they are concerned about the investments. They need to investigate further. But they applied to the FSCA for a side pocket, so they moved that assets into a side pocket. And that is about 8.8%, 8.6% of the total value of the overall portfolio. So it's a sizable amount of money in the fund, which is now in the side pocket, which now allows the fund managers and the promoters of that instrument to go to investigate. Now, the question is, where was that money invested? Well, that was invested into what they call two structured notes, directly and indirectly linked to the taxi industry in South Africa. In other words, they were financing the buying of new taxis and also the buying and selling of existing taxis in the marketplace. So, and we all know that the taxi industry in South Africa is very, very large, and all the taxis in South Africa need to be financed one way or the other by the banks and by intermediary companies. We put up special structures that takes money, capital from investors like this fund, and provides the taxi operators with finance, and they have to pay the money back. It's a fairly normal practice that applies to all kinds of instruments, whether it is solar power or buildings. Someone borrows money and you pay it back at what we call an enhanced income. Now, as a consequence of the downturn in the economy, high interest rates, the high unemployment, many of the taxi operators have been unable or willing to repay their loans that they need to the originators of these funds, and hence the payment to the fund could not be made. So that's where they are now. I've spoken to the fund manager, Rowan Ethel Short, how they're going to be collecting this money. And as I said, it has happened in the past. We had it with the Land Bank, which was a very large similar type of debt instrument which ran into trouble. It took 4 years and it was resolved and people got their money back. Another example is African Bank. The same situation. They couldn't pay their loans. It was side-pocketed in the various funds across the country. And it took 19 months for that problem to be resolved. And one hopes that the same happens with this side pocket related to bridge taxis. And it could take a year, it could take 2 years. But there are many, many large investors in this particular fund. PSG, for instance, is the biggest investor in this fund. And then there's companies like Brentest. We have an exposure to that. And we've already communicated to our clients, there is a problem. Do not panic. It's a normal procedure. While the fund managers stroke originators of these instruments take time to resolve the issue and get their money back. As I said, there's a substantial amount of money floating around in the taxi industry. But like any part of the South African economy, they're also battling to repay their debts. And as I said, it's you cannot escape from the bad economy anywhere in South Africa. It could be Pick n Pay, it could be Astral Chickens, and the taxi industry is also facing difficulty. High interest rates, petrol is through the roof, consumers don't have cash. So there's a problem one hopes will be resolved in the next year or two. In the meantime, investors have lost no money. It's in a side pocket. When they get a statement from their investment company, it will say 8.5% of your funds have been parked in the side pocket. It's still an asset, but the balance of your fund is freely liquid, it's freely tradable. That is invested in better class instruments like RSA, government bonds, corporate bonds, bank bonds. That's how enhanced income funds work. They spread the risk across the whole spectrum of instruments. And generally, the public don't fully understand how it works. They simply hand over the money. And as I said earlier, the investment returns have been very, very good, talking about 9 to 10% year after year, with absolutely no sign of risk. But risk suddenly develops, and investors will appreciate that you cannot escape from risk anywhere in South Africa.
Now, how big is the MI Plan Enhanced Income Fund in total?
I was told that it's big. The total fund was over 12 billion rand. So it's a large fund. And as I said, there are many, many companies invested in this, and many wealth advisory companies like ourselves use the fund as part of building blocks of their respective investment portfolio. So, you'll find exposure to the fund, but it's part of a diversified portfolio. You might find 10 or 15% per individual investor in the fund, and therefore 8.5% of that is in the side pocket. So the rest of the portfolio still carries on. There's no loss of value at this point in time. It might happen, but it's not time to be panicking. These things are very normal in the market. And some of our biggest investors are invested in this fund, as I mentioned, Old Mutual, Nedbank. They're all involved in this. So the whole market is discussing it. And I thought it was very important that we talk to our clients very quickly, which we did, and they appreciate it. And, I would say 99% are saying, thank you for talking to us. We understand that there are risks, and we hope that the side pocket will be removed at some point, maybe a year, maybe a year and a half, and you'll get your money back.
Now, how much is in the side pocket now in total, more or less?
Well, 8.5% of 12, it's about 800 million. So it's a large chunk of money. It's invested in two structures, if I can call it that way, financing structures which are directly or indirectly linked to the taxi industry. Now, the fund managers told me about half of that is secured by the taxis themselves. They're brand new, haven't been sold yet. They park somewhere, so they can go and take those taxis and sell them in the open market and get their money back. It's the taxis that have been sold to individual taxi owners that are operating. They know where they are, but due to financial difficulties by the taxi owners, they are unable to pay their debt. It's like you and I not paying our bond. We just don't have the money at some point the bank will come and take it back. So there's a process that has to be followed to go and repossess those taxis and then resold or whatever the case might be. So that's where the delay will come in.
At this stage, there's no reason for investors to fear that that money is irretrievably lost.
No, I really don't think so. There might be some losses if some of these taxis have been wrecked and guys haven't paid their insurance premiums, but this is all protected within the structures. That it's all done for you. There's insurance taken out on the taxi. There's a car tracker attached to a taxi. They actually know where every single taxi is in the country. That's how it works. But if there are losses, and one hopes there won't be losses, it will be minimal in the overall scheme of things. But it will take time before we have that answer.
You've said it will take time to recover the money, but at this stage, obviously, there's no way of telling how long that might be.
No, we don't know that. But I think the important thing is that the fund managers, which is Vunani Capital was the ultimate fund managers, they need to, and they are communicating to the public, and they should communicate consistently. And I think that's the way you deal with these things. To try and hide and not talk about it and hope it'll go away, that is not the philosophy. And I personally follow. We immediately send out notices to our clients saying this is happening. There are rumors in the marketplace, but here are the facts. And most people are comfortable with that. They're sophisticated investors. They understand risk. And, it is part of the market that we're in South Africa at the moment.
I just want to ask you, what exactly is the difference between a money market fund and an enhanced income fund?
Yeah, it's a very good question. Money market fund is an investment in very, very short-dated instruments issued by the banks and the issues. In other words, 1 year money or less. And so any instrument shorter than a year is considered a money market, and there's very little risk. It's issued by the banks. You get your money back exactly a year later. So it's the lowest risk instrument, but the interest rate is lower than the other instruments. So as they call it, the further you go out on the duration curve, now you start getting lending money to the government, for instance, government bonds. Now, government bonds are not as guaranteed as money market, but it pays a higher rate of interest. So that bond will be repayable in 3 or 5 or 10 or even 30 years. As I said, that there's this long duration curve. But to explain in layman's terms, the longer the term of the loan, generally the higher the interest rate on that instrument. And that's where investors have been making good money, because they have been paying very much better rates than money market rates. So for years now, money market rates have been paying 4 to 5%. The enhanced income funds have been paying 8 to 9% because they invest in slightly riskier assets. And then right at the end of the curve, the instruments that pay the highest rate of interest also have the highest level of risk. And the market knows this, and all enhanced income funds will have those kind of instruments in them. But normally they don't default. So there's now been a rental default on that portion, the one that pays the highest interest rate, and you draw it all back to the state of the economy and the taxi industry. And now they have to go and find the money and repay the investors. So it's a process, but it's a good question. That's why people have been using enhanced income funds for many, many years, including ourselves. And the returns have been fantastic. The straight line return, 8 to 9%, better than the JSE. And all large investors and companies have been using enhanced income funds as a way to protect against inflation.
And this event, as if I may call it that, is no reason to change your strategy when it comes to investing in an enhanced income fund.
No, absolutely not. We've made no changes. We've made no recommendations. We still will put money in. We'll still be using other enhanced income funds. We have always diversified within the income fund space, which is a general investment principle. But there's no need to panic, because it's a very large portion of our market, of our stock market. And nobody wins when you panic, because it's no need to panic, because the issue is being dealt with. And I think key lies in the communication to the clients and the general public. There are some guys trying to spread rumors about the fund, but there's vested interest. They would like to get the funds into their management, and we just tell people simply ignore that. Stick with your fund as a percentage of your overall portfolio. It's tiny. You made so much money on the offshore funds, you can absorb it quite easily.
Thank you for that explanation, Magnus. That was Magnus Heystek of Brentest Wealth speaking to BizNews. I'm Chris Stein.